Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 17th of September. Starting off with the FTSE 100, where it's up and away through the 200-day moving average at 76.30, breaking that very irritating February resistance line, which has been obviously in place since that peak that we had earlier in the year, and not far off that May resistance line projection target, 77.80, which hopefully will hit early this week. But the key here is holding above that February line and the 200-day moving average. Both the 50 and 200-day lines currently rising now, which is quite a coup, and that suggests the next time they meet, if they ever meet, we'll have a golden cross, and the run-up to a golden cross tends to be the strongest part in the cycle. So let's see if that works for what is traditionally not exactly the best time of the year, September, October. Breaking 77.80, we could be up to 8,000, which is the top of that red rising August trend channel. On the downside, if we break back below 76.30 in the 200-day line, then I suppose the floor of that channel and the 50-day line towards 74.70 would be the destination for this market. But obviously, we're not looking at that after that big break of the February trend. Moving on to the DAX, and here the picture is, I suppose, slightly disappointing on the end of the week, given that we failed just above the 50-day moving average again. We gapped up on Friday, but at least we've held the gap, and the 50-day line is also rising. But I suppose here the key thing is to hold above the uptrend line there from December. That's around 15,600, and above that looking for an eventual break of recent 16,000 resistance, and then up to 16,500 hopefully by the end of next month. The key here is not breaking back below 15,500 and the rising 200-day moving average. Dow had a rather weak end to the week, let's say, with the bull trap failure through the 50-day moving average. At least that is still rising at 34,800. We've got the October uptrend line there, 34,400, and want to stay above that. Otherwise, there's a risk of testing June-July support around 33,700. But hopefully this is just a blip before a move to the upside. But we are conscious that since June we've had a double-shouldered head and shoulder on both sides. So two peaks ahead of the peak in July, August, and then two peaks after it. So still a bit of a risk there of a breakdown for this market, at least looking at that 200-day moving average. Moving on to Bitcoin, and here the picture looking a bit better now, actually, after the, I suppose, the double top that we've had from April to July, and then this right-handed shoulder. And the market had a go at breaking that shoulder, a go at breaking below the 200-day moving average of 25,100, but so far we bounced back, looking to break that line of resistance there from July around 27,400 to give us the cue that we could be back up to 30,000 by the end of the month, but still a bit early days on that. But the bullish divergence that we had there at the start of the month seems to be working, an uptrend line there in the RSI window, so that helps the idea that we'll break that July resistance line relatively soon. On to the stocks, and starting off with our exploration, where it looks like the message is finally getting through that the company is as good as the fundamentals appear. We've got an uptrend line in the RSI window, which has been in place since the end of last month. We've also broken a line of resistance from back in May, and the 200-day moving average at 19 pence, above 19, looking for 23. Well, hopefully by the end of this month, actually, I think we've got enough time for that, while we remain above that 19 pence level, which seems quite likely now. If you're a fan of the shares and looking for greater glories, then perhaps a line of resistance heading towards 27 pence could be on the cards, maybe by November time, something like that. Moving on to Cadence, which has one of our magic signals attached to it. Unfilled gap to the upside off the low, and also an uptrend line in the RSI window. But the unfilled gap to the upside, the big thing that we had on the 11th, on the start of the week, and we've also now got a rising 50-day line, so that suggests that we do have a decent signal for the upside, and above 7.75 pence, and the 50-day line looking for up to 11 pence by the end of next month. I think the fundamental trigger there, the acceleration of potential production and licenses, etc., etc. Moving on to Corcel, or Corcel, as some people might want to say. Here we've got new support here coming at old resistance, so the old resistance around 0.4 pence, 0.39. Above that, looking for a relatively swift retest of the best levels of this month to date, up to 0.55 pence plus at that October 2022 resistance line projection. But the key here is that we hold 0.39 or so, and we're helped along by the fact that the 50 and 200 day lines are now rising. So that means a golden cross is probably only another week or two away. The run up to that tends to be the strongest part in the cycle, as I've said earlier on. Enteq upstream is an unusual inclusion today. Here we've got rising 50-day line, the sideways shuffle above it. So we're looking for the shares to flip up to the top of that rising trend channel from last October, as high as 15 pence by the end of next month, i.e. this October. And the upside value while we hold above the floor of that channel, around 8.5 pence. On to a stock which is, I suppose, one of the highlights of the week, and I was suggesting that if there was any time for the shares to finally turn around, this would be it, and it looks like the shares were listening. Unfilled gap to the upside off the low, bear trap gap reversal from below the June support, so those are two big ticks for Greatland as well, and we broke on Friday, we broke the gap higher day, or the gap up day as you would call it, around 6.9 pence. Looking for a relatively swift push now up towards an implied target from a line which I'm just about to draw, which should be up towards an easy move towards the 10 pence area by the end of this month, hopefully, given the speed of the turnaround. But after all those marginally lower lows that we had over the last year, finally we've had a proper gap higher and a decent rebound. So at least while we're above that 50-day line, looking for 10 pence over the near term, maybe the next 2-3 weeks. Moving on to Utopia, which had a bounce at the end of the week. Here we've got an uptrend line in the RSI window, so that does give us hope. It's a bullish divergence line, does give us hope that we're actually going to have a decent move soon. We're previously looking for the 10 pence area on the last rally for the shares late last month. Looks like we might have a second go now. An end of day close through 5.3 pence should be enough to give us a second chance at 10 pence, hopefully over the next 2 to 3 weeks, maybe even sooner. Moving along to Jersey Oil and Gas, and JOG is bouncing off a rising trend channel there from the beginning of June. That number there around 174 pence. Above that we're looking for up to 230 pence by the end of next month, maybe a bit sooner. That process, it could be accelerated the longer we stay above the rising 50-day line at £1.84. Ideally, we stay above that ahead of a move higher. On to a less high-profile situation, but one which is looking intriguing from a chart perspective. You've got MobilityOne, and the reason is that we've got a sideways shuffle along a now rising 50-day moving average, little bull flag there at the end of the week as well. So all we're waiting for is at an end-of-day close above 6 pence and post-May resistance to give us a move up to 9 pence plus over the next 2 to 3 weeks, maybe even sooner than that. So let's see if the shares can step up the plate. Upside value while we hold above that 50-day line, around 4.7 pence. Moving on to mobile streams, where I've been willing the shares to head higher. And here the charting position was decent in the sense that we had a break of that falling wedge there from back in April. That was way down at 0.07. We then recovered the 50-day line, currently at 0.09. And if you look closely, you can see the 50-day line now rising, V-shaped bull flag breakout through 0.1 pence, and that suggests that we could be up to 0.16 as soon as the end of next month. The end of day close above, or the end of week close above the 200-day line at 0.11, the first proper move above that 200-day moving average since early last year. So something may finally be on track there in a positive way at mobile streams. Northcoders is next, and the reason for the inclusion here is that even though the shares have been in the wars for quite some time, we've had, 4 days in a row of very, very strong price action, opening at the low, closing at the high. A very unusual configuration there. Initial target here up to £2. Above that, we're looking for an upper parallel of that triangle as high as £2.50 by the end of next month. So quite punchy call there, but very unusual, strong configuration there for Northcoders. So hopefully that will work for the bulls. Upside certainly valid while we're above 180, which is just below recent intraday support for the shares and resistance on the way down. Really pleased to see the performance of Pensana over recent days and weeks. Shares hit my first target, which seemed to be pie in the sky when it was originally mooted a couple of weeks ago, 36 pence. Above 36 pence on an end-of-day close basis, looking for 50 pence by the end of next month or even sooner. We want to see the shares remain above the 30 pence zone, whatever happens. Got the rising 50-day line to power the stock along as well, and the unfilled gap to the upside earlier in the month. On to Panther Metals, where the shares have bounced, as suspected, off a broadening triangle from back in March. It wasn't an easy call there because there wasn't much charting information to go on, but the initial target here up to 4.1 pence. Hopefully we'll see that early this week, and then after that, maybe by the end of next month, up to 5.8 pence, maybe in the afterglow of Tuesday's investor event at the Coat Brasserie in St. Paul's. But ideally we see the shares stay above that 50-day line at 3.3 pence. Onto a stock which has an intriguing setup at the moment, RC365. Here, I covered the shares on Friday intraday on a tweet and was looking for an end-of-day close above the old August support there, 37.5. Nearly got there on Friday, but what you can see there is a very strong candle on Friday, so we opened at the low, closed at the high. That normally delivers upside for the following session, as it did back in the end of August at the low there, so there's several days of rising price after that. So let's see if an end-of-day close above 37.5 on Monday, if we get it, will then give us follow through towards the 80 pence zone as we are hoping for there. On to the last three. First one, another one which hasn't been here for quite a while, Sportech, and very interesting chart on the basis that obviously of all the gaps down, but we had the big gap down earlier in the month, and we've had two unfilled gaps to the upside. Support coming in at the top of the second gap at 70 pence, which suggests that we were really overstretched on the downside and that we should at least hit that resistance line there at 91 pence early next week or during next week over the next few sessions. But the key here is above 70, looking for 90 pence plus, and also that the shares have vastly overstretched on the downside, the RSI down to 10 pence at the lows. On to one of the heroes of the recent past, and a stock which has been pretty obscure. Great turnaround here with the unfilled gap to the upside above the rising 50-day line, and the sideways shuffle then as well for much of August and going into September, and then the vertical move. Unfilled gap to the upside on Friday, with the message at the moment being that while we're above resistance on the way down, 71 pence, we are still looking for 85 pence and possibly above the 85 pence level, a new leg up to £1.40, although obviously we need to stay above that 71 pence level to fulfill the best on the upside there. Finishing off with Trellus, and here, nice move after a sideways shuffle off the lows, rising 50-day line. We're broken above the 200-day moving average at 7.25 pence. Above that, looking for 13 pence as soon as the end of next month. Ideally, we stay above that 200-day line as much as possible ahead of that move. The other positive here was that the rally started with bullish divergence, so a lower low there in August, but the RSI the same as it was in July at higher prices. So looking decent there on Trellus if you're looking for an early opportunity for a turnaround. That's it from me today. More updates during the week.